This is our Forex blog for January 31st, 2014, and these are our currency indexes. Before I show you how to best trade with our software, I'd like to say that we have released a new version today, version 3.4.2, and this has the first draft of our new Forex signals. So you want to add these to range charts, such as Euro Dollar. And I've put in new code that gives you alerts to what is happening as it's loading. It lets you know that data is loading. It lets you know when the data is done. You want to go to FX trading signals, and these are in our sample charts too. If you already have them on your chart, they will just work as new signals, and they also have the option of showing the trailing stops now. And this is what I mean by it lets you know that it's ordering data. This uses an absolute ton of data, uses multiple different indicators with different time frames, so it has to order the data for all of those. And it now determines how many bars are over the last 2 days, and it goes a little bit beyond that, and it lets you know approximately what percentage done it is in calculating all the past bars. Sometimes if you have multiple ones up or too many, then you will, the updating of the percentage sometimes doesn't work, but at least it gives you an idea. Of course, if you want to see the trailing stops, which I've spent probably some of the most time in the last 2 weeks working on, you want to click on show stops. So it has to recalculate everything. Sometimes you're going to get actually different trade signals when you have the stops versus not, because if you're in a trade and the trade is statistically strong, I widen the stop and I prevent going into trades that are against that trend. So you can see it's 73.7% done. Sometimes this does so many calculations it does occasionally run into trouble like that. So you can see it got short here, had a big win, short here, big win, short here, small win, loss, small win, loss, decent win, very small loss, win. And it's never going to be 100% accurate, because you can see we're in a downtrend right here, so we're looking to sell. And the market, pulled up a little bit too much before, the trend resumed down, and then it made a really big move here, and then resumed its downtrend. So it's very hard when the markets are down a lot not to have a loss in the first pullback. So if you use this in combination with trend lines, if you use this in combination with our currency indexes is in the back, and of course fib targets, most of the time you're better off selling the 50 and 62% level, and so you can avoid that one loss there. Also, on the next wave up, most of the time if it does break the high, it's going to go to the first or second fib target. So if there was a sell trade right here or here, you might want to wait for this level and above. So the fact that it gave a sell signal right at the 1.618 fib target, very high probability. So just because we have very accurate signals that I actually myself run automated trading from, that's why I'm determined to make them so accurate. It doesn't mean that there aren't going to be losses. You could sit down and have 2 or 3 losses in a row if you trade at the worst time. If you don't take the next trade, that might be a 40 pip win. You could lose money during the day, whereas the system that took every trade made money. So just be careful and be you still should learn how to trade. Put your support resistance areas on there and take the best trades. So that being said, let's look at how to use these currency indexes. It shows you what each currency is doing: the dollar, the yen, the pound, euro, and you can see the daily, weekly, monthly trend underneath it. Euro is pretty weak, the dollar is strong. You can see when it got to the upper containment band, very high probability reversal area. Most times these contain price. It may go a little bit beyond it and then go sideways, or what typically happens, it reverses. So coming up to 7, the euro is very likely to come down because of its longer term trend. You would want to sell the euro versus the strong ones. You got the dollar and you also got the yen here. The yen's very strong, but it's above its upper containment band. It's more likely to reverse. The dollar is going up, hit the first containment band, pull back a little bit. It's right at the previous day's high, very likely to try to go up again. The euro is likely to go down. So coming up to 7, you have a very high probability euro dollar sell. And if you got a signal on the chart coming up to 7, you would want to take it. Then you can see coming up to 7, it fell from 35.60 all the way down. And you probably saw that on the actual range chart. So when you use our range charts in combination with just the most simplistic and very easy analysis of the currency indexes, you're going to do way better. So the currency signals are for people that are brand new, but the more you know, the more good trades you take and avoid bad trades. So, don't be lazy, do the hard work, spend 100 to 300 hours learning all the things that you really need to know to be a very good Forex trader.